I just hit $20,000 in my dividend growth portfolio. I'm so excited. If you've been around the channel for a while, you'll know one of my first videos was talking about the fact that I had just hit 10,000, and that was just a couple months ago, so I've pretty much doubled that. And I thought it was finally time to do a portfolio reveal. It's been a long time coming. I was putting it off because I have some pretty dumb investments in there, but today we'll see the good, the bad, the ugly. I'll talk about some of my positions as well as my plans for the future. And I actually bought this software that has some tools that I think are really cool. And overall, I think it'll be a good investment for the channel. We'll see how I'm feeling about it, but we'll get to use that later. But without further ado, let's just get into it. Actually, at $20,936.83 at the time of this recording, which is Sunday, July 27th, 2025. That makes me super happy to see. Man, I love seeing that number. As you can see, my total gain and loss, I'm up 2,900 bucks. We're closing in on 3 grand. Honestly, a lot of this stuff is fairly recent. I really went heavy during the tariff sell-off. But as you can see, I wanted to start from my lowest positions and work my way up to my highest. So mutual funds, I really just have like 250, around 250 bucks in there. I threw this into this FCNTX fund years and years ago because, I really didn't know much, and I still have a lot to go. But they say diversify, they say index and mutual funds the way to go. So I had this in here, and honestly, I've kind of forgotten about this. I don't really have too many plans with this. Maybe I will liquidate this and put it in a position that I think is just better. But this has just kind of been here in the background. As far as ETFs go, all that I have is SCHD. If you don't know, I am a dividend growth investor, so I've gotten very heavy on dividends, and SCHD is a very big dividend paying and dividend growing ETF. I have almost 1,400 bucks in there. Now, SCHD it's actually my highest paying dividend asset right now, but honestly, I don't put too much in that often, because a lot of times stocks really just seem like they have better opportunities. I mean, there are a couple we'll look at right now, but I don't always like the slowness, I guess you could say, of SCHD. Now, it has performed really well, like around 10-11% growth over the past like 10 years, but sometimes I just think there are better opportunities. But anyways, enough rambling on that. Let's move to my stocks. Now, looking at my stocks, one of the first things you might see is, oh my goodness, this is a lot of stocks. This is a huge portfolio. How in the hell am I managing all of this? Well, the answer is I'm not, to be honest. Now, a lot of these are more recent, whenever I kind of figured out somewhat of what I'm doing. But with like at least half these positions, it was one of two things happening. One, either I had one thought that led me to buying, or I just kind of cherry picked off of someone else. And as you can see, I always talk heavy about reinvesting dividends, and I'm not reinvesting like half of these. And the reason is I don't want to buy extra shares of half of these. But let's just start up here at ABSI, the first one. This is what I'm talking about, where I had just one thought and that led me to buy it. What's the reason I bought ABSI? Literally, it's just a pharmaceutical company that is heavy on AI, and my whole thought process was AI grows quick. And so I put like 40 bucks in, and I got lucky. I'm up 42%, but that really isn't a good thesis. And honestly, that led me to probably my worst investment ever, Mattel. I own 50 shares of Mattel, over $1,000. I'm down about 20%. That was kind of the same thing. My only thought was the Barbie movie is coming out. So I bought into this stock years ago. I saw all the hype around the Barbie movie, and for some reason, I thought that it would shoot this up. And also, for some reason, I decided to put $1,000 into it. I bought pretty much right at the top, and it has gone down and moved sideways ever since. Now, it did go up briefly, and I was in profit about $8, and for some reason I thought it was going to keep going up. I don't know why I didn't just sell out. at break even, but then the tariff crash happened and I went down again. So we're still waiting on this. I will say I've looked into it, and this really isn't a company I want to hold for a while. Their fundamentals don't look the greatest, but recently they have been making a little bit more money and they have some plans for the future. So I think at the very least I can get out at break even, but maybe I'm just coping. Some of these positions, like I was saying earlier, I cherry picked off of other people. We have Powell, SYM, Yelp, Zoetis, where else? InnoData, right here, InnoData, Hershey's. These are all plays from Nathan Robert. If you've watched my channel, you probably heard me talk about him. He has a lot of good content, but I would literally just watch his videos and see him analyze stuff, and I would just pick every so often, like, oh, I like this stock, and I'd throw some money into him. And some of them I got pretty lucky. Freaking SYM, I'm up 118%. That is nuts. But if you watch my last video or one of my most recent videos, I really don't plan on doing that much anymore. I want to actually have a good thesis that I have kind of looked over myself and that I have faith in. So I'm going to limit that. And one of these positions, Ford, this was another one that I kind of just had one thought, and my only thought was Ford's been around for a while, and I really don't think it's going to go anytime soon. And I was down for a good chunk of time in Ford, but it's starting to go back up. In the meantime, it has been paying me a solid dividend around like 5%, but I haven't been wanting to reinvest that. I've just been using that money to put in other stocks. But with Ford, I'm probably going to liquidate this position very soon and just kind of roll that all over into SCHD. But a lot of these positions I do plan on getting out at some point, and I'll show you now actually my ideal portfolio, at least out of what I have right now, in terms of stocks that I'm going to be holding for a long time. And that, I guess, brings me to the software that I was talking about. Let's switch over to that and I can show you what I'm talking about. Qualtrim. For those of you who are familiar with Joseph Carlson, you might have seen this before, but as much as I hate to spend money, I figured that I could part ways with $10 a month. I think this could be a great personal investment, but also an investment in the channel as well. So I hope I can give you a lot of value with this. But one thing that I think is really cool is the fact that I can see my portfolio and a lot of the dividend stats as well. So as you can see, in terms of my portfolio, I know you can already see some of it right here, but we have 14 holdings out of all the ones that I just showed you that I really have faith in and that I want to continue to hold for the long term. And so I know it's not at 20 grand anymore, but whenever we sell out of some of the other positions, obviously I'll still be at 20 grand and I can roll that into some of these positions. But right now my total gain and loss out of all of these is $2,200, and I'm estimated to make $160 in annual income, and I have a little over a 1% dividend yield. So as you can see, my top stock is Constellation Energy. If anybody's seen my video about this, I really like this company. I was very excited to make a video about this, and really I was just excited to invest in it in general. I really believe in nuclear energy, and Constellation Energy is like the biggest nuclear company in America. They own like half of the nuclear plants in America. I think they have a lot of room to grow. And Comfort Systems is one that not only did I already like, but I was looking into it before I even made this video, and I like it even more. And that's not just because they crushed earnings and shot up. I'm up almost 80% on this position year to date now. I got very lucky with this stock. I'm very pleased. But they do a lot of HVAC. And not only do I think that's just good in general because I like AC, but data centers really, really need HVAC, especially with AI. AI creates so much heat. I think that this will kind of piggyback off of AI and has a lot of room to grow in the future. And we've already seen it recently. I can look into some of their stats, and we can just see like their dividends, for example. This is just monster dividend growth. 66% in the last year, 49 last 2 years. It has been just dramatic how much growth we've seen. As you can see, some of my other ones, ASML. This is one I entered very recently. I bought my first share around like 800 bucks, and then it crashed like 10% the next day. I wasn't I wasn't very lucky with that, but I do plan on buying another share of ASML and UNH tomorrow on Monday. I want to get into UNH before the earnings call. My thought process is there's so much negativity baked into United Healthcare. If there's anything remotely decent, it will just skyrocket. Now, they could miss, but I'll keep buying more. But regardless, these two are companies that I really want to get into right now. And a big reason for that is their valuations. So another thing that I like about this tool, not sponsored, I wish I was, I can see their past 10-year average, or just, I guess, 10-year price to earnings. And, I got to kind of draw this out in my mind, but we're a lot below, we're below average, I guess you could say, in terms of price to earnings, as well as the free cash flow yield. We are very above average over the past 10 years when it comes to ASML. That's what I really like to see. Having a high starting free cash flow yield is just a sign pointing to buy, and it's one of my favorite signs in terms of getting an undervaluation signal, I guess you could say. But you pair these two together, I'd think it's a pretty damn good time to buy right now. And ASML, or United Healthcare, is going through the exact same thing. If anything, it's even more extreme. So if you look at their PE over the last 10 years, we are so low right now. And free cash flow yield is the same thing. We are so high right now. And you combine that with the 3% dividend yield on UNH, which is like double their average. All signs point to buy. So I'm very excited to buy tomorrow. I just got paid. I'm going to deposit some money. And honestly, my plan was to buy a share of UNH and a share of ASML. There's part of me that wants to just buy like 2 or 3 shares of UNH, but I think I'm going to spread myself out a little bit and just purchase another share of ASML because I like them in general. So looking at some of these other ones, Costco I think is a really good company. I did buy them at an expensive price, but if you saw that video, I really just wanted to be in the company. Lowe's has been getting pretty battered recently, but they're a dividend king. I got faith in them. We're always going to need to build stuff. This is one I've kind of slowed down on my position on this, but after I get some of these other positions out of the way, I definitely do want to keep adding into Lowe's. United Rentals, this was a Nathan Robert play. Honestly, I really like the company, and I think I'm going to stay in it. Meta, I mean, everyone knows Meta. They just started growing dividends recently, actually, and I think this could be a very good dividend growth play. We'll have to see. MasterCard, I only own 1 share of them, and they really haven't moved too much up or down since I've gotten into them, but I will continue to buy shares at some point, although I guess now isn't the time. And then I own a little bit of REITs and then a little bit of waste management. This is my oldest position in this portfolio. I've had this for years, and my dumb ass, excuse my language, I didn't have dividend reinvestment turn on for this, so I missed out on like 5 years worth of reinvesting. But if anyone has been in the space long enough, you probably know that this is a damn good company. It's recession resistant. Look, they buy back shares, they grow their dividends. Overall, this is a very good company that I'm going to be in the long term. But I only own like 3 shares of them or something like that. I don't know where. Let's look at my holdings. 2 shares. Wow, that's even less than I thought. But we can see my dividend breakdown. So yeah, FIX, I'm up 79%. We're down on a couple of these, but overall, definitely in the green if you can't already tell by this number up here. But I know industrials are making up a large part of my portfolio right now. I definitely want to add onto the technology as well as the financial services. And I mean, if you couldn't already gather that I want to buy UNH, I'm going to up my healthcare a little bit. But technology and financial services are definitely ones that I want to add to a little bit more. Another thing that I think is really cool is that it has an AI generated analysis of my portfolio, and it shows the qualities as well as the risks. So if you want to take a second to pause the video and read through those, you can. But going back to my portfolio, we can see that my highest income is by SCHD. It pays me about $51.75 per year. United Healthcare is my second highest, and actually Realty Income is my third highest, which I thought was pretty interesting, just considering the fact that it is one of the lowest positions in my portfolio. But I'm very excited to see how these will change throughout the next few years, especially with some of these having extremely high growth rates. We can see my yearly income estimates. If anybody knows how this works, please let me know, because we're not even all the way through July yet, as you can see, and I already have like half of my dividends from August somehow. But September is supposed to be a pretty good month for us, and if you look on down to March 2026, that's supposed to be our probably our best month ever of our portfolio of all time. But that's not even including all the money that I'll put in leading up to that point. So I'm very excited to see that. There's a lot of other stuff that I can see with this tool. I can run DCF calculators. I can look at earnings transcripts, and we can actually see the earnings coming up this week. We have Waste Management, United Healthcare, Microsoft, MasterCard. I really don't know what day I'll upload this video, but I just wanted to go over that and highlight some of the extra stuff that Qualtrim has. Other than that, I really don't know what else to talk about. That's just where I'm at as far as my main dividend growth portfolio. As you can see, I'm still a big amateur. There's a lot of rebalancing that I have to do, but I really think within these next few years, I will be way farther than I am now, and I'm very excited to see not only uh, price growth but dividend growth as well. I'm dreaming. I'm dreaming of the day that I make $100 a month, $1,000 a month in dividends. I'm very excited. Uh, Aaron, if you're seeing this, throw me your positions, bro. We can do like an AI analysis or something. I know you don't want me to like pocket watch you, but I'm excited on this. I want to share it. But anyways, I don't really know what else to talk about in this video. So if you enjoyed, consider leaving a comment, consider subscribing. I'd really appreciate it. Other than that, good luck on your investing journey.